Good morning. Hope everyone is doing well today. First off, shout out to all the veterans that have given their lives for our country. Happy Memorial Day, everybody. Sorry, I'm trying to get my lighting working. It's being a little weird. Hold on, let me see if this fixes it. That's a little bit better. I got to get my lighting fixed. I bought myself a new LED lamp. Anyways, guys, so yeah, today I figured we are just going to do kind of a little bit of a mock open. With that, I think we're going to go over some open trading strategies, and we're going to try to, be ready for on demand. If you don't know what on demand is, it is a great practicing tool for traders. It basically allows you to replay any market day, and so we're going to go back and do a little bit of a mock open. After we go over some open strategies today, we're going to be looking at some opening strategies. Let me catch back up. What's up, Dan? What's up? Yahareel? Appreciate. Hope I got that right. Appreciate you joining us. What's up, Bradley, Sid, CH, Justin, Emmanuel, Sid, One, Rob. Good morning, team. Daniel, Leo. Good morning, guys. Yeah, it's not. It's just a practice session today, guys. Yeah, the market's obviously closed, but the show must go on, guys. The show must go on. All right, and so with that, let's take a look at, it's not going to be a super long. It's not going to be a super long class today, as it is a holiday, and I would like to enjoy it a little bit. And so I'm up no matter what. Like, I get up at 6:30 regardless, but like, I would like to enjoy it at least a little bit. And so it's not going to be a super long class. Let me know what the volume is like relative to everything. Whoa. Why is this locked? Oh, it locked it. There we go. Let me know what the volume is like. Can you even hear the music, team? Let me know. There we go. Let me get this working here. Let me see. That's about right. I could probably zoom out a little bit. Keep it straight. Let me see. Sorry, guys. Bear with me. I'm trying to... There we go. That should be good. All right. No music yet? Man, I'm slacking today, guys. I'm slacking here. Let me see. Ah, man, I made my coffee too strong. What is that, bud? Oh, my goodness. Look at this. Who is this?
It's the orange ghost.
It's the orange ghost from Pac-Man.
Yeah.
Amazing.
I'm gonna do pinky.
Thank you, buddy. This is great. I'm going to put this right next to my computer. Thank you, bud. My son just drew me this, guys. It's the orange ghost from Pac-Man. Amazing.
There's also a pink one.
There's also a pink one?
I got a blue one.
Okay.
She's a pink.
Yeah, buddy. Hey, but hey, buddy, let me do this class and then I'll play Pac-Man with you. Deal? But yeah. Yeah, he's a beast, man. That's right. Alright, let me know what the volume is like. Team, what's the volume like in here? Is it good, bad? Let me check it myself. I'll be right back. Hold on. I'm gonna check the volume. It's not too bad. I'm going to turn the music down just a little bit. There we go. All right, so that should be good. All right, guys. So, like we said, it's Open Strategies Memorial Day Trading Workshop. We're going to be going over just two strategies today, just two really easy open strategies for you to add to your trading arsenal. I do want to preface the rest of this stream with, look, guys, I am not an expert by any means. I am not, the best trader ever. I am profitable, but obviously I'm still working on my own trading, my own strategies, and these are just my strategies that I trade at the open. Whether they work for you is going to be very subjective. Everybody has different personalities in trading, and so with that, certain strategies are going to mesh well with different people, right? And so everybody's not going to be able to use these strategies effectively, and you do want to understand that. You don't want to stay too rigid with the strategies you trade, and you basically want to find ones that mesh well with your own personality, and these tend to mesh well with my personality. A lot of these are scalping strategies using momentum at the open, which I think a lot of opening strategies are. I think if you're trading the open, without trading momentum, you're doing something wrong there, because, you know, mostly what we get in the first 1 or 2 minutes is just volatility and momentum, right? You could be biased in a certain direction, but those 1 or 2 candles might fake you out really easily if you're not trading the momentum there. And so with that, these strategies are very momentum based, very scalp style, and you do want to understand that. Like I said, you know, everything we put out there is free here. We're not experts. We just give everything to everybody for free and just teach people what works. Specifically with us, it might not work for you, and so understand that. Alright, good. What's up, Flex? What's up, dude? Alright, so yeah, so like I said, this is Open Strategies. Again, shout out to everyone who has given their lives for our country. Happy Memorial Day, everybody. Alright, and so with that, the first one we're going to go over is a pretty common one. It's a very simple and easy one. And like I said, we're going to go over a quick explanation of these strategies, and then we're just going to practice a few examples of them and go ahead and close it down. I'll let you guys enjoy the day. So yeah, so basically, the market red to green move is basically the market. Hey, wow, buddy, thank you, bud. But hey, you gotta let me finish this. I know it's great, buddy. Thank you, but you gotta let me finish this, okay? Thank you. All right, sorry. But yeah, so basically, this strategy. I gotta turn the music down in my head. So this strategy, what you're essentially doing here is you're looking for volatility at the open, obviously, and what you're really looking for is you're looking at either the SPY or the S&P 500 as the opening bell rings. You know, this is pairs trading the SPY and the S&P 500 with another following stock. Now, the following stock is going to vary from person to person. I tend to prefer to trade like AMD, MU, you know, microchip stocks, or cannabis stocks even will subtly follow the market in a way not many people realize. And so it's going to vary from person to person. Again, for me specifically, I just tend to look at AMD, MU, CGC, like cannabis, microchip stocks as my following stocks. But again, that's going to vary from person to person, and so you got to figure out stocks that work well with you and that you can learn and understand. So like this says, the basic premise of this strategy is that the market pushes up at first. You know, the first 1 or 2 1-minute candles might push up originally at the open. Then a lot of the time, and this has actually happened a pretty decent amount lately, is that the market will push up in those 1 or 2 first few candles, those first few 1-minute candles, and then we'll get a big reversal. You know, the market will be pushing up, and then all of a sudden the market will just reverse, rip down, and then break lows of the day. You know, the previous low of the day that was formed in that opening range, right? When that low of the day break happens, that's the momentum I'm scalping into on the short side, trying to ride it down for a quick momentum scalp on the short side, on the downside, on the bearish side. All right, and I know everybody, I might not explain it the best, and so with that, I'm going to draw a chart here, and then I'm going to draw out exactly what I'm talking about. Okay, so here, let me make sure, yeah, okay, you guys should be able to see this really well. Okay, so yeah, so this is the SPY on Friday, last Friday. This happened last Friday. Okay, and so again, we're using 1-minute charts here. I know there's a cool little drawing tool that PowerPoint has for me. Hold on, let me see. There we go. Okay, so again, market's gapping up here. You know, the market's gapping up. What we're really looking for is we're looking for this big upward move up here. You know, you can also see this is the pre-market highs, and it's also the previous closing price, right? And so we form this really obvious high up here, and we get rejected back down. The big thing we're looking for here is we're looking for, number one, we're looking for pre-market confirmation, which we do get here. You know, you can see low, low. And so we do have some pre-market confirmation there. And when the market goes up originally and then immediately reverses and comes back down, once this break happens, this low break here, that's where we're jumping in short. Not in the SPY itself, but in other following stocks. And so let me erase this. I feel like John Madden. But yeah, so that's basically what we're looking for. We're looking for a slight push up, and it doesn't necessarily have to be a huge push up, but we want an obvious move up in the SPY. We want an obvious push up, and then when the market reverses, so here's the obvious push. We got this big move here. We got the SPY squeezing up here in that first 1 or 2 1-minute candles, and then we just get a quick reversal back down. Okay, when this low breaks right here, is the low. Sorry, I'm a little crooked with my drawing. When this low breaks right there, that's what we're jumping in short. But again, we're not jumping in the actual SPY itself. We're not jumping in the S&P 500. What we are jumping in is following stocks. And so I can give you an example of that here as well. I mean, I realize like these lights make me look like a vampire. Like my face is all red, but then, you know, the light kind of, it makes me look all crazy, but that's okay. I'll look crazy for today. But that's basically what we're doing. And now, just to give you an example here, let me erase this and show you kind of what happens in a lot of other following stocks as well. There we go. Let's move forward. Here's MU. Same day, same exact thing, right? So MU pushes up. We get the move up here. We get one or two candles, one before the bell opens and one after the bell opens. And then as the SPY breaks lows, what do we get here? We get a big downward move on MU that you're able to scalp into. And I think I actually took this trade on Friday. I can't remember whether I did or not. I know I took this type of trade a lot last week. Ah, you got me, buddy. Thank you.
Another ghost. That's the red one.
Thank you, bud. That's a great job, buddy. But yeah, so I know I took this type of trade multiple times last week, and again, it's going to vary from day to day which stocks actually follow the overall market. But that's essentially what we're doing is we're looking for a slight push up. It's all about forming lows. So we're looking for a slight push up. A lot of the time we're really trading off of this low of the day break in this opening candle, right? A lot of the time the low is going to be in this opening candle, and so when we have the low right here specifically, this low right here, that's what we're waiting for, a break. We're waiting for a reversal, a breakdown underneath that level. And again, look, I know this one really broke down here. You know, this one really broke down. The reality is it's not always going to do that, and you want to treat it like a scalp. You want to take 10 or 15 cents, at least the way I trade it. I treat it very much like a scalp. I do not try to marry this type of move, and I just try to get in and out extremely quickly. Because again, a lot of the time you're going to get some momentum at the open. It's going to be pretty tough overall to actually trade, and you don't want to just invest and just plan to hold it for any significant amount of time, in my opinion. At least if you're trading it like me, you're going to get some reversals. You know, the market's going to move back up and go up and all this other crazy stuff. And so with that, you just want to be careful, take your profit when you have it and get out of there, if that makes sense. Let me catch back up on the chat here. Yeah, stock market's closed today. What's up, Flex? Alright, so does everybody see what I'm saying? Now explain how hard that really is. Oh, it's extremely difficult. You guys know me, like I trade live every day. You know, I trade live every day and I'm not an expert, you know, but the trades you see me getting into, like you'll see me trade this strategy. Like if you go back and you watch last week's stream, you'll see me trade this. Like I've traded this one a significant amount, and it's one of my favorite ones. The reason is because there's just a lot of momentum that comes with that. Like when the market itself breaks lows, and I know this one broke lows as well, but like when the market itself breaks lows, there's just a lot of momentum to take advantage of there. A lot of longs, like people that went long at the open, for instance, like people that go long. Let me erase some of this. Like I said, I feel like John Madden here. But the people that end up the people that end up going long at the open, and that's a significant amount of people. But like the people that you get that are just betting that the market's just going to keep going up. You know, when the market breaks this low right here and heads down, what do those people do? Right? Those people sell, and those people exit their positions. And what does that cause? That causes a lot of downward momentum. The squeeze happens, and a lot of people start covering their long positions. Shorts like me pile in, and that gives you the momentum that you need. But again, don't get greedy with it. A lot of the time with these, thank you, buddy. But hey, you gotta let me finish this, okay? Like I'm right in the middle of work. I really appreciate it. This is a great job, bud. It looks just like Pac-Man, but you gotta let me finish this, and then I'll hang out with you, buddy, okay? But yeah, so basically, a lot of people are gonna get greedy, and they're gonna want to hold on to these positions. But the reality is, I try to give myself a 1-to-1 risk and reward ratio here, and I let the good accuracy take it, help me. Because if I give myself a 1-to-1 ratio, I know my accuracy with these is going to at least be at like 80%. that's a lot of profit to be made there, but you got to be strict with it, and you can't, you can't get too greedy and just try to hold for this entire move. I think this is a little bit misleading here, because this doesn't happen a lot. Only when the market really picks a nice downward trend does this happen, and a lot of the time you're just going to get a quick downward move and then a move back up to the highs, right? And you don't want to risk that, so that's my suggestion at least. But like I said earlier in the video, everybody's a little bit different. It's going to vary from person to person. People are going to prefer different things, and people are going to have different styles in trading, and that's okay. If you can make it work, you can make it work. I can't judge you for it. But yeah, that's my style of it, at least. I'm just gonna mute this music. Sorry guys. Did everybody hear me? Because the music's up so much it was hard to hear. Anyways, yeah, the music went up way too much. Yes, Bradley. Sorry, I just muted the music. The music makes it, I don't know what happened. I think me using the roller in my mouse made the music go up. So I just muted the music altogether here so you guys can hear me. But yeah, what I was saying is that a lot of the time, guys, the market's not going to make this big, nice move that you see here. That doesn't happen very often. Only when the market picks a trend really, really well do you get this big downward, move. Only when the market really picks a downward trend. A lot of the time, you're going to get a quick surge of momentum down, and then you're just going to get a quick pop back up, and it might turn into a red to green move. And that happens very often as well. And if you get too greedy with it, like you refuse to take profits in this type of trade, you're just going to get faked out a lot. I try to give myself a 1-to-1 risk and reward ratio because I know if I just take 10 or 15 cents off of this, I can at least maintain a 75-80% accuracy rate with it. And I think if you watch the stream every day on YouTube, you know my results and you know that that's probably accurate, right? If I take 10 or 15 cents, I can at least maintain 75-80% accuracy, and a 1-to-1 ratio, even though it's not a super favorable ratio, it's still going to be extremely profitable overall, if that makes sense. And so I hope everybody understands that. Just don't be greedy with it, I guess, is the overarching point that I'm trying to get across here. All right. Yeah, the market's closed today, brother. Yeah, I'm using a 1-minute time frame. Yeah, that's about right. Yeah, I just turned it off. I just turned the music off. But yeah, it's about, you risk 50 to make 50, or you risk 100 to make 100. Just 1-to-1. But again, the accuracy is what you're taking advantage of. In trading, there's a big dynamic between, the risk and reward ratio you're using and then your accuracy rate, right? You don't have to have an incredible R&R ratio if your accuracy is high enough. And you don't have to have incredible accuracy if your R&R is high enough. Did I just say that? And you don't have to have incredible risk reward if your accuracy is high enough. And so they play off of each other, and if one goes up, the other one doesn't need to go as high, basically, if that makes sense. And that's what you want to understand about it. Does everybody understand? Before I move forward, I'm going to go over one more strategy, and then we're just going to go over a few examples of on-demand trading and leave it at that. For our second channel, I'll also have another video coming out today as well. Yeah, no worries, John. What's up, bro? The pre-market high is important because that's a lot of resistance, right? And I document the pre-market high in the previous day's closing price just to understand where that is, so if we get a reversal up there, I can get out. It's also a good risk level. Yeah, the holiday market's closed for sure. Yeah, this is just a practice session. I'm gonna do on-demand trading, so on-demand paper trading, just to show you guys a little bit more in depth on these strategies. But yeah, the actual market is closed, so I'm not gonna be trading my real account today because the market's closed. All right, everybody got it? I'm going to move forward then. It acts as both, Bradley. If the stock's underneath it, I consider the pre-market resistance. If it breaks above it, I'd look for it to hold as support, but that's a different strategy. It's going to be a little bit more relevant in the second strategy I go over. Yeah, for sure. Yeah, guys, hit that like button. I'm gonna move forward. All right. All right. So with that said, the other strategy I have is basically the opposite. This is going to be a market red to green move, and like this says here, this strategy is basically the opposite of the first one we went over. In it, you look for weakness in the first 1 minute candle or two at the open, and once you see volume come in, you then wait for a quick reversal on the upside, breaking the previous high of the day and opening range high that formed there. This can also take advantage of the pre-market high like we were just talking about, and again, the stocks vary depending on your style and niche in the market. Some stocks follow the market better than others, and so it's best to stick with what you know. I don't know, buddy. I'm working right now. Hold on. All right, sorry. But yeah, so again, the stocks are going to vary depending on the person, right? Everybody's going to have their own style, their own niche, so to speak, in the market. And certain people are going to trade certain stocks better than others. And so with that, figure out stocks that you like that work well with these type of strategies, and then implement those strategies on the stocks that you work well with, right? Because you're not going to trade every stock well. Different strategies are going to work better on different stocks, right? It's not all going to be universal. And so with that, find stocks that you tend to trade better, that make you comfortable relative to the range, relative to the price, relative to the movement, and then attack those stocks, because everybody's going to be a little bit different. You're not going to be able to trade exactly like me, because your personality, I'm sure, is going to be a little bit different than mine. And so with that, find stocks that work better for you, find strategies that work better for you, and then implement them on the stocks that work well with you, if that makes sense. So just to move on here, we can look at another example of this and see, here's the SPY on 5/5/20, right? You see downward move here. What we get is we get a downward move, and then we get, let me draw this out. We get the downward move, bounce off of the VWAP, and then we get a nice rip up here, breaking this high right here. So this is the high we're essentially looking for. When that high breaks, we're going to look to go long on a lot of other following stocks here. Not every stock, but we're going to look to go long on stocks that follow the market. And so the pre-market high, you can even see, was right here. And we get a little breakout after that, but that's going to hold as resistance a lot of the time as well. But you do want to understand where that pre-market high is. A lot of the time, if the pre-market high is above me, I'm taking profits before I get there, because a lot of the time we're going to reject off of that level. Sometimes we're going to break and we're going to hold. You can see when we did break the pre-market high here, we actually held really nicely as resistance. Let me see. So you can look at this here and see we broke the pre-market high. This is the pre-market high here, and when we broke over it, look at this. We held it as support really nicely, and that's a really nice dip buy as well. You know, one of my favorite momentum strategies is also this, which is waiting for the market to break over a pre-market high and then pull back to that level, and then I go long, anticipating it's going to hold support there. But that's not really one we're going over. I'll go over that in another video, because that's not really an open strategy. You can see this was like 10 minutes after the open. But this strategy specifically that I'm looking for is I'm waiting for the market to form a high right here. You can see a lot of the time I'm documenting this opening range high right here. When I document that opening range high, then I'm looking just for a break of this. And again, this is the SPY here. Volume comes in. You get a really nice breakout on the upside here. That's the momentum I'm trying to take advantage of. Again, it's a scalping style move. It's a scalping strategy. So I'm just looking for 10 or 15 cents off at the top. I'm not trying to marry these moves. I'm just trying to take my money and get out of there. So this is the SPY on 5/5. We can look at, I think this is AMD, or this might be CGC. No, this is Disney, actually. So this is Disney. Let me draw that out. I forgot to draw that. This is Disney. Same day. So same day, what do we get? We get a low formed here, we get a rip, and we get a breakout above that as well. And so taking very quick trades, not trying to marry these moves. I'm just looking for a small breakouts above the high of the day within the first 3 candles at the open, and when we get a high of the day break in the SPY, a lot of the time that's going to drag other stocks like Disney up to break, and I can ride it up for a small momentum trade, if that makes sense. And that's really all it is. Very simple momentum strategy. You know, I had a guy comment on my one of my VWAP videos, and he said the way I explained the VWAP was too simple. And I haven't responded, but one of my responses that I think I'm going to tell him is that sometimes simple is the best move, right? If you make it too complicated, there's no point, right? It doesn't need to be complicated. You can understand the VWAP's just a trend indicator. So if the stock maintains above it, it's in an upward trend on an intraday short-term basis. Stock maintains below the VWAP, it's in a downtrend on an intraday short-term basis, right? It doesn't need to be more complicated than that. Another thing is that it considers volume, right? So the more a stock pushes away from the VWAP, the more extended it is, because the less volume that has followed it up. You know, I made a video on this about a year ago, and now everybody's making videos trying to act like they knew that. They didn't. They didn't put two and two together. But the reality is that's the reality, right? The more stock moves away from the VWAP, the less volume's there to follow it up, right? And I'm not saying the VWAP's not going to follow it up eventually. I'm not saying that it's going to come back down, but that's how you use the VWAP, and that's what people need to understand about the VWAP in general. But yeah, so that a very simple strategy. Does everybody understand that? I'm going to move forward and we can go over some on-demand examples of this if you guys want to. Yeah, it depends. That's all subjective. Why do you trade MU or AMD and not the SPY itself? Because the SPY is expensive, has a huge range, and I'm just more comfortable trading AMD and MU. That's going to be subjective, Bradley. I always keep pre-market on my chart. Yeah, I trade the same stock a lot of the time. What link are you trying, Justin? Yeah, I don't know. Yeah, I don't know. That it isn't working. That's weird. Here, I got you. If you want the scanners link, I got you. Yeah, here, I got you. Hold on. But yeah, very simple strategies, team. Give me 1 second. I'm going to have to look up some on-demand examples of this as well. So it's yeah, here you go. Yeah, ETFs are a little bit different. Yeah, there's Trade Ideas link if you want to check it out. And basically, John, the real reason I stick with certain stocks is because I trade them well, right? If you guys know me, I built my account up and I'm up about 10 G's in my account, right? I've traded most of it live. I've taken some trades off stream. And again, I mean, we're just a free resource and community, so I don't have anything to prove to anybody really. But I'm up about 10 G's in my account, about 10K. And so the strategies and the stocks that I'm trading are working really, really well. And I would be crazy to be like, hey, you know, yo, my stocks are working really great. My trading's going really well. I'm making all this money, but I'm going to give that up and I'm going to go try something else. You know, that would be crazy. Einstein's definition of insanity is continuously trying the same thing, expecting a different result. And so with that, I'm just going to stick with what works for me. I'm going to keep trading the same stocks, the same strategies that I've been trading. Why? Because they work. You know, that's the easiest, simplest answer, is because they work. And I'm just going to keep trading them until they stop working, which they will at one point. Nothing works forever. But at this point in time, they've been working really, really well, and I'm just going to stick with that and just try to milk that for as long as I can until they stop, basically, if that makes sense. Yeah, I mean, I always keep my pre-market levels up. Yeah, I mean, if you look at my charts, these are my charts here. I got too many charts up here. Yeah, these are my charts right here. And so, yeah, I mean, I keep pre-market up a lot, you know. But yeah, with that, bear with me, guys. I'm going to pull some on-demand trading up. We're going to look at a few different examples of some strategies and try to, you know, get some on-demand trading in. So give me 1 second, team, and we'll hang out and trade a little bit. And I can show you a little bit more in-depth version of a lot of these strategies. So 1 second, team. While I'm doing this, guys, why don't you... while I'm doing this, team, why don't you talk about your favorite strategies for the open? Talk about your favorite stocks to trade and your favorite strategies at the open. Kind of gift everybody in the chat with your own methods of trading. And like I said, give me 1 second. I'll be there, and we'll work on some of these. Okay. Buddy, you okay in there, dude? Most of it's this month, but no, it's not just this month. I would say about 6 or 7 of it has been this month. The rest was slowly built up. I recently scaled up in size, and so with that, that's what's benefiting me a lot. I think it's just my scale up in size. And so it's one of those things where, yeah, I mean, I've traded a lot this last few months, and I have scaled up in size substantially in that, but it hasn't just been the last few months, basically. Yeah, 1 second, team. So I was kind of rushed. I thought Mitch would be here today, so I kind of missed some of this. Alright, so we're going to use Uber as one on the 21st. We're just going to go over this one real quick and then we'll move in. So this is basically the red to green move on Uber. We're going to use May 21st. I'm going to put the music back on and just let me know if it's too loud, team. I'm going to lock it too. There we go. Let me know if that works. It's not super loud. It should work. Pause this. Alright, so there's Uber. Again, we're looking at the SPY specifically here. Let me give my charts a little bit of time to load, and we'll look at the actual strategy. Yeah, I mean, these are the first 5 to 10 minutes. Yeah, they're not deep into the market day. Like I said, this is mostly opening strategies, and so with that, they're not really meant for longer term. All right, come on, SPY. Let's go ahead and load here. Let me try it maybe this way. Can you guys see that? Yeah, you can. Okay. Let me press play, see if that works. I'm gonna rewind it a minute and press play. But yeah, I'm basically using, guys, I'm using Thinkorswim. which is a great tool for traders. Thinkorswim essentially lets you go back in time and retrade any market day. Man, look at the color. But yeah, it basically lets you go back in time and retrade any market day that you want. And that could be an incredible tool for days like today, where the market is closed, but okay, look, this isn't working, so I'm just gonna pull up another chart and show you guys this. For some reason my chart's not working. And so let me pull up a different one that I already have up. Yeah, for sure. MU is one of those ones that I just trade a ton. Alright. I'll try this one more time here. There we go. Alright, I got it working. Finally, man. It took like a long time. Alright, so again, this is May 21st. What we're looking for here is we're looking for the SPY itself. And this is all within the first, like, 6 or, really the first 10 minutes is what this is. And so again, what do we see here is we see, let me fix this. There we go. Okay, so what we get here is we see the SPY itself has dropped in the first 6 minutes. Let me fast forward it a little bit. Sorry guys, my internet's struggling, I guess, for me this morning. I don't know if you guys heard that, but my headphones batteries are about to die too. So in a second, I'm just going to turn off the music. Alright, and so with that, here's the first, let's see, we'll get the first 1 minute chart. Alright, so here's the SPY itself, and you can see what the SPY did here. Really, I missed it. I'm going to go back 1 minute. And then I'm going to pause it there just so you guys can see it. Yeah, press play. Yeah, I should have plugged my Ethernet cord in for it, but alright, so anyways, you can see Uber's kind of consolidating. A big thing here is that it's above the previous closing price. This is something I really like. If you watch me trade, I love using the previous closing price. Super effective and works really, really well. And so with that, as you guys can see, the SPY itself did exactly what we talked about. So it dropped, formed, a low down here, and so it looked weak at the open, and then we got a quick reversal all the way back up here. And so we got a quick reversal, and eventually we broke this high right here. So you can see we just broke this high right there, and that's what we're trading off of. We're trading off that momentum. We had a downward move, a squeeze back up, and the SPY broke this high right here. In this case, it's right around 296.80s. And with that, when that happens, we can effectively long into Uber. I'm just going to take 1,500 shares as an example. It's about what I've been taking. And so we can press play, and we can see we bought 1,500 shares as the SPY broke above that level for the red to green move. Again, this is a lot of the time this is called a red to green move. Sometimes a red to green move is also referred to using the previous closing price break. But in this case, we're looking at the SPY to break this high up here, and then we're looking to take advantage of the volatility that we get on Uber right here. So the SPY broke highs, and that's what we're trying to trade off of. We're just trying to trade that momentum. So the SPY breaks above this level here. I'm going to clear this so it's a little bit easier to see. Basically, we're looking for the SPY to break this level here. And when it does, it usually gets a surge in momentum on the upside, and it can be a very bullish, strong sign when that happens. Now, like we said, we jumped in a few hundred shares of Uber here, and we're going to try to take profits very, very quickly. The great thing about the previous close being here is that we can use this previous close, which is this light blue line, it's the previous closing price. We can use that level as a risk in the trade, if that makes sense. And it can be, again, a very profitable way to approach this type of strategy. And so the SPY's ripping up. We're looking for some quick momentum here, and we're going to take 750, which is half of this position, off as soon as we do get that break. Oh wait, did I use Lyft or Uber? Yeah, maybe that wasn't the good maybe the previous closing price wasn't a good risk. The opening range low is probably the risk we should give it, but we're going to give it some time. And like I said, I'm kind of doing this on the fly. Mitch was supposed to be here, and so I kind of had to come up with these pretty quick. But regardless, that's the strategy. Now let me fast forward it. And yeah, like I said, instead of the previous closing price, just for this example's sake, maybe it would have lost there. But just for this example's sake, we're going to use that opening range low that was formed right here, which again can be a very profitable way to approach it. Yeah, it's basically just taking advantage of the SPY's volatility, and which is what we finally got here. The opening range low is also a huge resistance level, but again, we're going to look to take half off on this rip up once it breaks highs up here. And so we take half off, and then we hold the next 750 level up until an understandable resistance. A lot of the time you can go back and look at the historical chart to see exactly when that's going to be, and I think a good level would be 35 right here. Whole dollar of 35 looks like a reasonable reward target, and so we're going to let it push up. And as it gets close to there, again, we're just taking advantage of the SPY's volatility. Let me make sure you guys can see this. Oh, my bad, guys. You can't even see the SPY. There's the SPY, if you guys see it. Look at the SPY rip. That's what we're taking advantage of. And then as it pushes up, we can just get out the rest. But yeah, this is the... this is the SPY volatility that we were looking to take advantage of, is that we get the downward move at the open. We get a huge rip up, breaking that high of the day level right here. And then that's the momentum we're trying to attack, is that break right here. Give it some time, and then we get a following move up. And this is something where it's an important lesson for traders to understand, is that most stocks follow the market. They might lag a little bit behind or in front of it, but most stocks are going to follow the market. And so as the market rips up, a lot of these other stocks like Uber, Lyft, AMD, MU, a lot of them are going to follow the market to a certain extent. I think my headphones is about to die, so I'm going to just turn the music off. But yeah, a lot of these stocks are going to follow the market. And so with that, there's a lot of pairs volatility and pairs momentum that you can take advantage of as the market squeezes up like this. Is it always going to work? No. Like I said, I tried to set this previous closing price risk on the fly, and it would have faked me out. And so a good risk level that I even use for fades is that opening range low, which in this case would have been right here. Again, this type of stuff happens when you're kind of when you're kind of trying to do it too quickly here. But again, this volatility on the SPY, this huge momentum change, and the huge trend change. The SPY was in a downward trend. It rips up and breaks highs. That's going to drag a lot of these other stocks up, whether it be AMD, MU, CGC, Cron, whatever your favorite stock is to trade. Look to see if it follows the market on any particular day. And if it does, nobody remember what I said. And if it does, thank you, buddy. That looks great. Oh, it looks great, buddy. Thank you, buddy. Music's off. Yeah, it was supposed to be muted on my end, team. Did you hear everything? Sorry, guys. Did you guys hear everything? The craziness that can happen when you're actually live streaming. But yeah, did everybody hear everything I was talking about though? Like as the SPY rips up here, this is the volatility that you're attacking. Specifically when the SPY breaks this level right here. When the SPY breaks that level, you're going to get a lot of followed momentum in other stocks. And so in this case, the SPY broke this high, and what happened here? It dragged Uber up as well. And that's volatility and momentum that you can attack and take advantage of and exploit by trading it the right way and understanding where the momentum is going to come in. Right, and again, at this point, the SPY is moving down. That's the overall market. The SPY is the mini S&P. And so as the SPY moves down, when it gets a quick reversal and breaks the previous high of the day right here, it's going to consequently drag a lot of other mid and high cap stocks up. Like I said, 3 out of 4 stocks follow the market, and so Uber, even though it may lag a little bit behind it, a lot of the time is going to rip up with the market eventually. And that's the momentum you're attacking with this type of trade, and it's also the same momentum that you're going to attack with the short version of this strategy as well. Alright, so does everybody understand that? That's basically what I'm trying to get across. You can see the SPY upward momentum as it breaks those highs of the day consequently drags a lot of these other moves up, a lot of other mid and high cap stocks, and that's what you're taking advantage of. Okay, a good question. Bradley goes, okay, does this work with all stocks or just stocks from the S&P 500? It works with most mid and high cap stocks, so most stocks in the S&P 500. It's going to depend. Different sectors are going to trend against the market, and different sectors on each particular day are going to trend with the market. And so I wouldn't just say it always works, because it does not. What you want to do, though, is you want to look for a stock, and you want to look for stocks that are trending with the market on any particular day. And so basically, if the SPY drops at the open, and then you see another stock like Uber drop at the open like this, that can give you a pretty good signal that they're trending with each other. And so then that way, when the market breaks highs, you can front load onto other stocks and take advantage of that momentum from the SPY, if that makes sense. All right, cool. All right, so yeah, with that, give me 1 second. I'm going to go over the short example of this strategy. And I do want to preface the rest of this with, honestly, the short version of this strategy is one that you will see me take much, much more than the long version. I love the short version. It's kind of my bread and butter. It's a strategy and pattern that I attack almost every single day if it presents itself in the market, and it can be a very profitable strategy. I think the short version, the green to red move, works far, far better than the long version that I just showed you. And so with that said, let's go ahead and take a look at the short version here as well, just so you guys can understand it. How many shares is going to be relative to what you're okay with risking, Amit? It's going to vary from person to person. All right. And so with that, give me 1 second. I'm going to look at a few other examples of this and see if we can find the short version. Again, I trade the short one every day. We should get a lot of examples of this as well. And so give me 1 minute, team, and we'll take a look. So like I said, what's your favorite short open strategy? Let us know in the chat while I'm looking this up. All right, guys, so I got another example here. This one we're going to go over CGC, and we're going to look at May 19th is what we're going to look for.
Here's the case for the red one.
Thank you, buddy.
This is the case for it.
Oh, thank you, buddy. That's a great job,
And you
buddy.
could also use it for your face. So, like, put it around your face.
Yeah, I might do that later, buddy, but that's a great job. Thank you, bud. But yeah, today we're going to be looking at CGC, which you might not think follows the market, but I'll show you the correlation between the SPY and CGC here as well. Okay, so first things first, we're getting a nice little move here from CGC. We got a little pop up, and if you look at the market here, let me make sure we can see this well. You can see the market's kind of doing the same thing as CGC. We're getting some upward moves, downward moves, maybe a little bit of the opposite actually, but regardless, the big thing to notice here is that we're just getting some consolidation. You know, we're getting a nice little tight range here, and we're just getting some consolidation with both of these. right? And so that's what we're looking for. We see the consolidation. There's no huge swings in either direction. We're getting some consolidation with that. Now, as the SPY starts to run up here, you'll see the SPY take a really quick dive back down. Let me, we'll take 1,500 shares here as an example. And so the market looks like it's going to be strong. It looks like it's going to continue to move up. But what we get here is, let me look at when this happens. Yeah, I think it happens right here. So what you'll see eventually here is you'll see the SPY take a pretty quick downward turn. Look at this downward move in the SPY. That's going to drag a lot of other stocks down, even if you don't realize it's going to. And so again, as the SPY pulls that move, we're going to short into CGC. We get a huge downward move. Maybe this is a little bit early, but we're going to short into CGC because the SPY just took a drastic downward move. And then what happens with CGC? We get a big downward swing here. Look at the SPY's drop. As the SPY drops and specifically breaks this level, we're going to look to short into CGC and take half of the position off. I'd like to take either a third or 2/3 or half of the position off. But we're just trying to take advantage of the quick downward momentum that we're getting from the SPY and CGC. And so we got half move. We're going to take 2/3 of it off there. We're going to hold 500 shares left. As the SPY continues to break down, we're going to see if CGC continues to break down. And that's all we're doing here. We're not trying to marry this move. We're trying to take advantage of that quick, look at this big momentum here. The quick downward momentum, and we're just going to take the rest off there. That's all we're doing. Okay, so we're looking for the SPY to really break down here, and you can see the correlation here. Let me pause it. You can see the correlation from, here's the level right here at 834. The market broke this low right here at 834. Not 8:34 my time, 9:34 market time. We can look at 9:34 on CGC and see that's right there. And so you can see the big downward surge in momentum that the market breaking lows gives to a lot of other stocks. And CGC is a cannabis stock. It's not like anything that you would really think would be correlated with the market, but listen, I've traded cannabis stocks for years. They follow the market sometimes, and they follow the market well sometimes on a short-term basis that you can scout momentum off of. Is it going to continue to follow the entire market's trend that day? Maybe, maybe not. Man, I look super red. Let me turn this off, see if that helps. But yeah, it works a solid enough of the time to be a profitable way to approach the trade. And so I hope you guys can understand that and why we approach it in that way. Let me see. Sorry, catching back up in the chat. What's up, team? If I have a NASDAQ stock, should I look at the NASDAQ chart for the same type of move? I mean, that's all personal preference. The big thing is that you're just looking at the market. Like, I use the SPY, which is like the mini S&P 500, but it's going to vary. Like, I also have used the SPX, which is the actual S&P 500, and that's going to vary depending on the stock and stuff like that. And so it's not... You just need to find your own personal preference. I prefer to use the SPY because I think it shows me the clearest moves relative to a lot of the other ones. But again, that's going to be personal preference. It's not always going to be the same for each person. You know, everybody's going to enjoy using different ones. So Daniel, this is just a practice session, brother. This is just a strategy practice session. So we're not actually, the market's closed today, obviously. But it is live. Yeah, obviously. Yeah, I mean, they're both all right. Yeah, it all depends. The SPY is really just telling us what the market is doing. So, like, sure, it's built up with a lot of these other big high-cap stocks and these big profitable companies, but it's really telling you what the market itself is actually doing. That's why you watch the SPY, is to determine what the market itself is doing. You can also look at the S&P 500, and I promise you're going to get a very similar thing here. Like, very similar thing, probably the exact same thing. Yeah, look at it. So, and a lot of the times, the S&P 500, just to show you, a lot of the time, this move here is a little bit clearer on the actual S&P 500. So, like, this is the S&P 500 right here. You could use that, and I do use that a lot in my scalps as well, because as you can see, it's a little bit clearer of a move. It doesn't really take pre-market data. into account as much, and that doesn't influence as much. And so sometimes you're going to get a cleaner move like this that you can consequently short over there on CGC, if that makes sense. And so that's all going to be personal preference. The S&P 500 on Thinkorswim is SPX. But then the SPY is SPY, and it's gonna. You can use the Dow maybe as well, but it's all gonna vary depending on the person. Hey, appreciate it, Daniel. I mostly use VWAP and support and resistance. I'm not much of an indicator person. It's mostly just VWAP. I like to keep it simple and not put too much clutter on my chart. I think the more indicators you have, the more kind of clutter you're going to have on your chart. And I just like to keep it pretty simple and use the VWAP basically, and that's it. But yeah, with that said, guys, I'm going to go ahead and close it down. I'm having lighting issues. Look at the lighting over here. I'm going to turn this light off. There we go. That's noticeably better. But yeah, anyways, guys, I'm going to go ahead and close it down. So good luck, team. We'll see you guys next time. Can you show how you use the VWAP in your strategy? I mean, this one, in this video, the VWAP's not super relevant. The biggest thing to understand here, and I can just show you guys, basically a quick rundown on how to use the VWAP in general, right? Sorry, I'm going to just delete myself because I see a lot of kind of snow here. There we go. So basically, the VWAP is a trend indicator, and so it's going to tell you the short-term intraday trend of a stock, right? And so if you look at this here, like, what do you see? You see the stock's maintaining above the VWAP. When it really reverses here and starts to break below it, it's confirming a downward trend. And so when it breaks below the VWAP like this, you know, that's it confirming a downward trend, right? And so the VWAP is just a trend indicator. It's telling you the short-term trend. And so if a stock's maintaining above that, it's in an upward short-term intraday trend. And if it's maintaining below it, it's in a downward or bearish short-term intraday trend. And that's it. That's the only way you use the VWAP. And so you can look for like trend confirmations, trend rejections, trend changes, and that's how you attack the VWAP, if that makes sense. But yeah, guys, my wife's on the phone, so I'm going to have to close this down really quick. Yeah, I'm going to go ahead and close it down, guys. So enjoy your Memorial Day, your day off. Shout out to all the veterans that gave our lives for our country here in the U.S. Shout out to them and all of their families. You know, and have a good Memorial Day, guys. Good luck in the markets. We'll see you guys bright and early back tomorrow morning. Hit that like button. Click the subscribe button if you haven't already. And, yeah, guys, that's it for today. Also, if you want to use the same platform as us, like if you want to get around the PDT rule and it comes with like a lot of other cool stuff, like a course, demo account, chat room access, go check out this link. It's the platform we use. I'm also going to have another video talking about, you know, I'm going to invest in a specific stock. And by investing in a specific stock, I'm going to review why I'm going to ultimately do it in an upcoming video on our new channel. And that video should be out today as well. So go check out this link too. Go subscribe to our second channel if you want to see the stock I'm choosing to invest in and a lot of that other stuff. And so go check out those links, guys. Like I said, hit the like button, click the subscribe button, and I will see you guys later. Have a good day.